Ha! Another day in the queue pretending to buy a house. Spent 3 hours and earned 300 yuan.
Welcome to my real estate channel. In today's episode, we're going to talk about this scenario where people are getting paid to go to purchase property. I would say fake buyers in China, or is it really something really happening in China? For those who are new to this channel, my name is Cheng. I'm a professional real estate agent for 12 years in Malaysia. So if you like this sort of content, do consider subscribing by clicking on the button below. It will greatly help my small little channel here. And don't forget, at the end of the video, if you like it, please smash the like button so that YouTube algorithm will continue to promote this video for everyone else to see. Since I have a very small channel, every help counts. So I appreciate it a lot. And for the returning subscribers and viewers, welcome back. Now let's dive into this topic.
From Guizhou shared a video online where they pretended to be a customer at a real estate sales center to make money. This short video sparked lively discussions online, with many viewers humorously expressing a desire to participate and some even confirming that they had earned 300 yuan that day by doing the same. Similarly, in Harbin, a long line was seen outside a property developer's sales office, drawing curiosity from passers-by. It was discovered that simply queuing in this line could earn someone at least 10 yuan each time. Industry insiders say that paying people to queue at property sales centers to stimulate high demand is a common tactic in China. For instance, individuals can earn 100 yuan a day by pretending to be potential buyers, with the amount sometimes rising to 200 yuan, and occasionally they might also receive food staples like cooking oil and rice. This phenomenon is merely the tip of the iceberg of the current chaos in China's housing market.
Eliminate all illusions. Let those who should go bankrupt do so. Another major real estate company faces severe setbacks.
Honestly, I don't know this is a trend happening in China. If you are staying in China or you have been to China recently and you've seen this sort of queue, is it real or is it a fake staging? Write in the comments down below and share your experience and thought about this topic or regarding this matter. Now, professionally in Malaysia, I never seen this sort of scenario happening. However, there is similar thing happening in Malaysia in regards to people getting paid just to be there. If you don't know, this is very frequent in auction properties in Malaysia. And if you want to make a quick buck, I do not encourage you doing so. But there are these fake bidders who actually go to the auction to do a fake bidding. However, they are getting paid by the actual bidders so that the fake bidders don't bid on the property. In a way, do not raise the price of the auction property. So that is what's happening very frequently in Malaysia. I don't know if you are aware. You can actually check them out by going to the auction site. There are lots of fake bidders, especially on certain prime properties. For those who have experienced before, write in the comments down here below and share your experience and thoughts about this. What do you think is a good method to avoid all these fake bidders going there to cari makan in Malaysia? That's what we call it. Or English, in a layman term, is called making a quick buck.
Whether it's Deutsche Bank or China Construction Bank, the exposure of this credit risk and financial crisis not only affects Shimao Group, but also serves as a critical warning for the entire Chinese real estate industry and financial markets. According to incomplete statistics, before Shimao, 16 other property developers in Hong Kong have been subjected to liquidation petitions, including Evergrande Group, Country Garden, Dafa Properties, and Yida China Holdings.
Many of the big property giants are not having a good time lately, especially in China. I heard a lot of rumors and speculation, and especially some of my friends who are working in China, Shanghai and in Guangdong and also in Beijing, that sub-sale properties and even prime properties are going down the drain. Many of the big time developers are having a financial crunch. Tell me about it if you have similar experience or your friends who also shared the same stories or experience. Write in the comments down below and let's talk about it. Of the big developers that is mentioned by this lady here, the one that having the most exposure in Malaysia is of course the Country Gardens. They have a project of 100 billion US dollars in Malaysia, which is called the Forest City. I made a video of that check out this link here above, and also I'll put in the description here as well if you want to see that video. Now overall, I think that project can be revived, but it may take a bit more time. The way I look at it, Forest City probably may revive back in the next 15 to 20 years, that depending on how much capital outflow the Malaysian government and put more marketing efforts to rebrand the place, or maybe can reconsider renaming the entire name from Forest City to something else. I don't know. The latest news about the Forest City by the Malaysian government is that they plan to do a high-speed train from KL all the way to Forest City. That may boost traffic, especially the tourism side. So actually there's many things they can do to revive the project. It depends on how active the Malaysian government is willing to participate to make the area more viable. One of the suggestions was highlighted in the comments below in my previous video about this project is to encourage the B40, the lower income earner, to stay there, probably at a very cheap rate or maybe a subsidized rental to boost the population there. That is also one of the good suggestions in my honest opinion, rather than left the place totally empty.
Why did a major institution like China Construction Bank take such drastic action? On the surface, it appears to be a response to Shimao's outstanding debt of 1.6 billion yuan. However, there are deeper reasons behind this move. First, the bank might be significantly entangled in Shimao's debts, feeling forced to act, suggesting that the problems extend beyond the 1.6 billion yuan and likely involve other high-risk loans. Why didn't the bank give Shimao more time to resolve its financial issues rather than pushing for immediate bankruptcy and liquidation? A look at Shimao's 2023 financial statements shed some light. The company reported an operational loss of 13.3 billion yuan, up 476% from the previous year. Shimao's total borrowings amounted to 264 billion yuan, with 199.4 billion due within a year, while its cash and cash equivalents stand at just 21.4 billion yuan. This is a huge mismatch. Giving the company another year would likely result in further losses exceeding 10 billion yuan for creditors. The second fundamental reason is a shift at the top levels, with the bank aligning with new policy directions. Unlike the slow liquidation process with Evergrande, banks will no longer support property developers by including them in any whitelist. The approach has now completely changed, marking a new era where banks, like other minor creditors, will turn their backs if necessary to minimize losses. If you can't pay, then the bank will have to intervene directly. This is a situation that many property developers will likely not be able to avoid.
So as you can see, there's a lot to take in from this guy sharing the situation in China. Take it as a grain of salt, do your own research, study the fundamentals. Although I'm a Chinese Malaysian, I'm not from China. If you want to do any investment or buying any properties in China, do your own due diligence. I'm also relying on third-party sources from the internet and also from the articles that is written, and also from some of my friends who are literally working and doing business in China.
A real estate agent from Huai'an expressed frustration online about the government's trade and housing policy. In a candid video, the agent criticized the policy's unrealistic expectations and limitations, stating, "Trade in the old for new? That's simply nonsense. I'm tired of it. This so-called trade-in policy took over my social media feeds yesterday, with colleagues excessively hyping it up. It got many owners of old properties overly excited, thinking they could easily exchange their small old apartments for large new ones. However, it's not as straightforward as you might think. The policy has strict requirements. It rejects small rundown apartments, resettlement housing, properties with second mortgages, or those that are difficult to sell. It feels like they're mocking us. Essentially, only new, loan-free, easily marketable commercial properties qualify. What's the point of calling it trade in the old for the new when it should be trade new for new? Moreover, signing a contract doesn't guarantee immediate payment. First, you have to list your property at its asset value on the Baika platform for 6 months. If it doesn't sell, only then might they consider newer properties. Listing below market value for 6 months? That's absurd. Why do we even need this policy? Also, forget about purchasing that luxurious apartment you saw in Tianqi Bay. This policy restricts you to specific complexes like Nanmen Mansion. Other complexes are off limits. So, in reality, this so-called trade-in policy is just an ineffective marketing gimmick. Wouldn't we be better off with less trickery and more sincerity? A netizen also humorously commented, quote, "It's almost like you can buy one and get one free."
So is this Chinese agent in mainland China saying that you could swap your old house to a new house for free or refinance? So I don't know what is the specific or the packages that being offered. So is this true that the Chinese government is offering buy your old property so that you can buy a new property? Is what being said by this local Chinese real estate agent is true? Write in the comments below if you have a direct communication with the Chinese agent so that everyone else can relate back or have a conversation below here. I don't know anything about it. I cannot give my comments about whether this is true or not because, like I said, I'm not there. But all being said, the situation in China as per the moment is not doing good. However, due to this problem in China, many investors are looking at Southeast Asia currently. The most of the bulk is going to Vietnam, Cambodia, Thailand, Indonesia. Malaysia, we have a smaller population, so we get a bit of a spillover. In terms of 1% of the spillover from China to Malaysia is also a lot. So that's all for this video episode. What do you think about my opinions? Write in the comments below if you have other thoughts and opinions and doubts about my assessment. Share this video for everyone else to view as well. And if you like this video, smash the like button and I'll see you in the next video. Bye bye.